Definitely the hardest one is buying the first property. Once you get the first property, it's like...
becomes a game,
It
right?
does.
The thing that you guys have cracked is the income piece, right? Which is the thing people really struggle to crack. If you can't crack the income piece, the property thing becomes really hard, right? Because you have cash flow constraints to actually how much you can afford to pay for out-of-pocket expenses. You have serviceability constraints. But if you can crack the code with how do I just earn more money, all this stuff becomes simple.
Yeah.
What's the hill costing? $1,000 a month?
It's like a $4,500 mortgage, but then with people renting it out, we're about like 1.5K
a month
out of pocket.
So what's that, roughly 20 grand a year, give or take?
We've worked basically out with once we purchase property 3, which is going to be around a $1.2 million place, it's going to be about 70 to 80K out of pocket per year.
Pre-tax.
And which we were discussing, we are basically saving 20K per year. So that's well and truly still covering the 20K per month, still being able to service all those. Then going through our first year, being able to negatively gear that with our tax strategy as well.
And because you guys are paying 47 cents on the majority of your income, essentially that means if the properties are costing you 60 to 80 grand a year to hold, you're going to get almost 50% of that back, right? So it goes from being 60 to 80 grand, let's say it's 70 grand out of pocket before your deductions, to then $35,000 after you get your deductions back. And when you then look at that versus how much you earn to carry $3-ish million, just over $3 million worth of assets, not that much, right?